Thank you very much, TK. TK now CEO of Premji Invest, former CEO of Wipro, so he's worn many hats. But TK, first of all, thank you very much for making it. I know you're frequently traveling between India, US, and other countries. We're glad we got you here. But as someone who's run a large software company and is today running this huge fund, take us through what you make of the current, phase of technology we're living in terms of the pace of disruption and change. How does one keep up? You heard the PhonePe co-founder saying that, the pace of learning has gone up. The Zerodha CTO says that he's learning a language and learning to build a project at the same time. How have things changed according to you?
So it's kind of funny, when you sit, when I moved from Wipro to this particular role, it was kind of interesting because Wipro is a very hard, and all IT services, they're very hard operational businesses.
You can keep the mic close.
And I have a lot of respect for people who kind of run that business because every day it's a grind. And you're exhausted at the end of the day and you hope you've achieved something. And it's really a hope because at the end of every quarter, every analyst across the world judges your performance. So that's the way it works. Luckily, in this business, what's happened is it's been more about the creative side, understanding what's going on, and really trying to figure out, because when we are making a bet today, we really have to see that bet play itself out over the next 10 years. It's not something that we can kind of invest today and run out tomorrow, which means that your ability to take bets and quantify the bets that you would take depending upon the probability of outcomes that you would like to get in the spaces that you believe are critical. So a perception of what the world is going to look like in the future is very important for us. And it can't be, with things changing so much, it's very difficult to get a point of view which is kind of deterministic.
Yeah.
So you have to work on probabilistic outcomes right across. So that's been the beauty of this job. More than anything else, I think, it's
and the fact that you don't have to take earnings calls every quarter.
And meet the press
10 basis points below estimates.
And meet the press every quarter because this is the first time I've done an event like this ever after I moved out of Wipro.
Wow. Thank you so much for doing it with us.
So if you go back and see right now, we've seen change across years. It's not something that we're sitting some unique period where we're seeing change. We're seeing, and change is really dependent upon the background in which you see change. I'll give you a very interesting example, and this goes back, I'm just going back a little bit into the past. If you look at history, the GDP of the world from 180 to 1830, which is where the Industrial Revolution really started, moved from something like 105 billion to something like 1.2 trillion in 1990 terms. From there on, it moved to 1950, it moved to 5.1 trillion. From there on till now, it's moved to 105 trillion. That's been the pace of change. And that's really come up to a large extent. The first part of it was driven by the energy revolution, which in turn spurred the Industrial Revolution. The second part of it was really spurred by the fact that technology came in. And technology has been a massive productivity gainer. And also add to that, open boundaries and lack of conflict have really you've seen change happening. So if you ask me, AI is the next paradigm. Now, is it mainstream yet? Because what happens is that when you look at most absorption by organizations and by the larger community, the network effect is very critical. Yeah. And right now, the network effect is not yet there across. There is impedance in that. It's only when that gets removed will we really get adoption at scale. And I think that's the challenge that we are looking forward to.
Right. Just a quick follow-up question on, the network effects and impedance. Is that specific to India? Because in a previous panel, someone said that, Indian enterprises seem to be more resistant to it even consumer-facing businesses. Is that different in the US? Is it easier to get people to adopt AI, or is it an industry-wide, country agnostic, geography agnostic issue that people haven't found critical use cases?
It's actually quite surprising that we haven't seen more of it here. But having said that, let me just put that in context. Every natural system in the world, be it bureaucracy, be it people, be it society, they operate under the principle that they have to, number one, every natural system has got two objectives. How do I save myself from getting destroyed? And number two is, how do I propagate? That's why you'd find bureaucracy starts small and suddenly they become very big, because they keep propagating. And their sense of survival is very strong. In India, traditionally, we have had a lot of bureaucracy. And I don't mean government bureaucracy, that's one part of it, even in organizations. So there has been a little bit of impedance. But having said that, I think it's really a question of, should we focus on applications or should we focus on models?
This is something we've been debating all day, and different people have different perspectives.
And I have a different, our view has been, as a firm, has been that as far as India is concerned, there is going to be a massive opportunity that's going to come up when it comes down to services. This is the place, India is really the global capital of services for the world. Most of the people who work in service industries, be it in BPOs, be it in industry-specific areas, all of them have detailed knowledge of what's going on a day-to-day basis and how they work for customers in the West. What has surprised me is that very few people out of that particular industry have come out and taken the initiative to do something. And the reason behind that is very simple. There are people who understand domain very well, who understand the problem very well, but they really don't have the technical chops to solve the problem. And I think in India, if we can get these two groups together to work together, there's a massive opportunity which can kind of come down the pike at us. And I think we can really do well in that space. So that's the one piece that we've been focused on as a firm, on how do we get these two teams to kind of start talking to each other. I must say our success has not been very great in India till now, but I'm hopeful, because this is an early motion. This is not going to go away in a hurry. And to that extent, if we start something now, we'll see the rewards of that in the next couple of years. In the US, we've been very successful with this. Because the great thing about US is that, every entrepreneur, once he sees a target or an objective, will just chase it. And that's been something that we've seen quite a bit. And they're fearless. Fear of failure doesn't exist. So to that extent, we have had more luck in the US than here. But I'm very hopeful, given what I've seen till now.
So more on the use case side, essentially India's opportunity. Talking about US, I mean, you have an amazing AI portfolio, right? From Canva to Hugging Face to Hippocratic to Poolside to Galileo, where you've invested with some of the top marquee Silicon Valley funds. How did you sort of, manage to build, this deal sourcing pipeline in terms of identifying these bets, getting a seat at the cap table? Has it been easier to do this where there are secondary transactions? How did you go about it, TK? Because it is something amazing, right? Fund based in Bangalore, that's on the cap table of pretty much every top AI firm in the world.
So we are not, again, these are some names that we have. There are quite a few others which haven't worked out.
You can tell me off stage once a session.
Which haven't worked out. Yeah. Which we don't necessarily talk about. But the reality is this, that if you look at it, we have a team on the ground in the US. Today we have 17 people.
70?
17.
17. And 17 this is people. In San Francisco?
In Palo Alto.
Palo Alto. Okay.
So we sit there, we are very connected to the ecosystem. Each one of our guys are technically very strong. To the extent that we have people who have written, initial white papers in specific areas. And so it's a technically very, very strong team. So we built it with that in mind. We said we'll first get people in the firm who are respected by the larger community. Because once they're respected by the larger community, the ability for the community to call them and get their opinion on deals is much better. So it's been a hard, really hard work over the past few years. I mean, we've been at it from over the past 8 years intensely. And it's now that we are seeing signs of success. And again, we've made bets. We don't know whether all these bets will play out. Right now, the valuations that you see may not be the valuations 2 years out or 3 years out. But these are bets which have been taken in a thoughtful manner because we believe that some of these companies will really break out and do well. To answer your question on secondary and primary, we typically go for primary deals if we can. We'd like to be on the cap table. We'd like to understand the technology. We'd like to get access to the boardroom. So in many cases, nearly all the cases, even though we may not be on the board physically, we are still an observer on the board. So we know what's going on in the company. Second is we are able to help them with a bunch of real world issues. The great thing about a lot of AI companies is that they have snazzy technology. There's a customer sitting on the other side that they can't completely relate to. So managing that interface is something that we do fairly well. And that's been one reason a lot of people have wanted us as part of their cap table.
Right. How did you convince Azim Premji that, we have to build this 17-member team in Palo Alto?
The funny thing is that Mr. Premji really is not... I don't know if you know how the structure of the fund is. The fund basically is money given to us by the foundation.
Yeah.
The only thing Mr. Premji keeps telling me is, if you end up losing money, think of the thousands of children in India who are not going to have money in the future.
No
pressure. Which is the only pressure that I have. But besides that, it's been pretty easy because he doesn't interfere on a day-to-day basis on anything. And Mr. Premji by himself as an individual is a risk taker. But he takes risks on people and not necessarily on technology. So that's the way he looks at it. And to that extent, I think, he's really been extremely supportive of all this. But he's also the first one to admit that he doesn't understand what the hell is going on in the space. So that's why it's a kind of an interesting mix.
Right. The other thing, TK, is it also easier to, take these risky bets in the US? Because the exits, the fact that, there's such a deep pool of capital. So even if you come in Series A, Series B, there will be someone down the road in, D, E, some investor with huge pockets of capital. So you can sort of take some money off the table. Is that also one of the factors?
Not necessarily. Not necessarily, because I think, as investors, we are risk takers. And I don't like investors who typically come in and say, give me a structured note so that I can have my downside risk protected. That's not investment in this game. Investment is having a view, a thesis, a prepared mind, and taking a bet. The only thing is that in India, we don't have the muscle today to do it. We haven't developed that yet. But that's work in progress right now. Because we have right now recruited a team on the ground to do exactly that. So I think it will take us a year or two to kind of get it to scale. The good thing is we don't have to establish a reputation here. We have a reputation here already. And to that extent, inbound is far better for us to handle. In the US, we had that problem in the initial stages. So with that in place, I think I'm pretty confident in the next 2 years, we'll be in the same position here as we were in the US.
Right. In fact, that brings me to my next question. If I look at Premji Invest, you've been really active in the public market space, in the private market space in India. You're an investor in some of India's biggest unicorns. Why are we not seeing that appetite when it comes to AI startups? Are you not seeing
because there aren't those startups in India. I wish I could say, because, I think what happens is that if you look at the companies that are coming out of India, there are very, very few who've got...
We have a couple of startups that are trying to build LLMs.
Yeah, now, would I invest in something that's a company that's building an LLM? I don't know. I don't think so. The reason behind this is pretty simple. See, if you look at most of the large models that are out there, they've pretty much taken all the data on the internet and absorbed it into the model. So the training part is all over. And, it's Jan LeCun has got this wonderful statistic, which is that if you look at the amount of data on the internet, and if you equalize that to tokens, it's 10 to the power of 13 tokens. So theoretically, it's 2 into 10 to the power of 13. If you look at a baby that's born, after 4 years, and assuming that the baby's optic nerve works at roughly about 20 megabits, then the baby has at the end of 4 years 10 to the power of 15 tokens. So the LLM models have absorbed everything. I think the biggest change that's going to come now is that post-training is going to become an area of focus, and inference is going to become an area of focus. And that particular trend we have not yet seen at scale, and that's going to happen. So to that extent, I think if you ask me, inference has already opened up a whole bunch of areas, and we have done a lot of work in that area right now, and including investments that are not yet announced, which are basically in the semiconductor side. So we are actually building it semiconductor up because we don't think that the current GPU architecture, given the amount of power that consumes, can actually work and scale for inference. So it needs a completely different architecture. And the architecture exists. Companies that are able to tape this out and bring out effective chips into the market is the key here.
Right. So when will you sort of have conviction to invest in AI startups in India? I mean, what are the one or two things that will convince you?
I think we already have conviction. There's no doubt about it. We believe that, like I said, India is the services capital of the world. I think it's really finding those one or two founders who can build scale businesses behind it, who come from the services side. And that, I think, is something that we have not yet found. We have found one or two, but scaling them is the problem that we are right now kind of contending with.
Right. TK, in the last week, one other major talking point, at least in the US, has been about whether LLMs, AI scaling laws have hit a wall. And there were multiple reports that, it's led to a slowdown in, I think, OpenAI's model. And then there were subsequent reports about Google and Anthropic facing similar issues as well. Are we in a phase where, AI investments will perhaps slow down to some extent because of this? Because the gold rush in the valley has been huge, right, in the last few years.
So, any process, any model evolution will never be exponential, right? And unfortunately, what happens is a lot of our colleagues in the investing game have believed that all outcomes are going to be exponential. It's never going to be exponential. It's always going to be an S-curve. So for those of you who are interested in mathematics, if you can look at natural system, there's something called inverse Gaussian distribution. Fundamentally, there will be decay after some time. And that's something that we have to plan into all these models. I think there'll be a change in the way models work. The large language models in the way they're working today, I think that with chain of thought coming in, and I think, really if you look at what OpenAI has come with, the O1 piece, that's a completely different model because that leads you to reasoning.
Yeah.
And I think there is going to be reasoning and inference is going to be the next big thing. My own prediction is that in the next 5 to 10 years, maybe not 10 years, 5 years, you would have workloads that are probably going to be about 80% are built around reasoning and not necessarily around core LLMs. My prediction is that in the next 10 years, core LLMs will get relegated into labs.
Wow.
So I don't think they will remain at scale.
Right. Last couple of questions, TK. I have to ask you this. As someone, who's run a large IT services company, which is a huge job provider. I mean, the software services industry in India continues to be the biggest job creator in the private sector. What impact is this going to have on engineering jobs going forward? We heard the Zerodha person saying that 100 people, they're trying to kind of transform their roles because the work that they were earlier doing, they're able to do with AI, which is analyzing customer calls and, getting it in a neat transcript and so on. what should we prepare for? Because India has one of the largest number of engineering graduates who pass out every year.
So I think there are two, three things there. There's no easy answer to that, but things like call centers and anything to do with customer support will get disrupted over a period of time. I'll give an example. We have a company in our portfolio called Navan. Navan is basically a corporate travel portal that's going against Concur. It's a $600 million company which is growing at the rate of 40% per annum. So when we invested in that business, their gross margin was running at around close to about 56%. And our plan was that we will take it to about 65, 68 and then take the company IPO. They had 4,000 people in customer support. Today they have about 140. Okay, so that's the kind of change that you've seen there. Completely different example. There was a company called Hippocratic.
Yeah.
That we invested in. Hippocratic was actually started, they started in our office. And Hippocratic itself was going after the nursing shortage in the US. So the US market is a very funny market when it comes to nurses. There are 900,000 out of about 4 million nurses who are retiring in the next 2 years. There are 100,000 nurses who never came back to work after COVID. So there's a 1 million nurse shortage. If you look at the protocols a lot of the nurses do today, it's calling up patients and asking about medication, asking about their condition. All that today Hippocratic does. And it's got so much of demand that they don't know how to fulfill it. They build their own models grounds up and they've been scaling like crazy. So if you look at that model, there's a need. The fact that there was shortage of healthcare professionals, these guys went and fulfilled it. So to that extent, those kind of opportunities are what we think are going to happen in terms of scale. But around customer support, Hippocratic is a different version of customer support. I think there's a huge opportunity. Code generation, I think the problem with code generation is that bits and pieces you can do very quickly. But when you look at the ultimate process and the amount of engineering debt that most companies have, I don't think that's going to come down in a hurry. So from that, if you look at that, I think the companies have to clearly refactor themselves. Their pricing models have to change. The models of passing inefficiency on to customers and making more money out of that, which is essentially what the T&M model was, that will get completely disrupted. It has to. It's a wrong economic model. And to that extent, I think companies that make the change will succeed. Companies that don't will not.
Do you talk to Wipro about this?
Look, I have a Chinese wall with Wipro. So I stay out of Wipro completely. The reason behind that is very simple, because we play in the public markets, we play in the private markets. Information leakage is the worst thing that can happen. So we stay out of it.
Final question, I think we're out of time, but TK, what are you enjoying more, Wipro CEO or Premji Invest CEO?
So I think, if you ask me, by far Premji Invest. Because the reason is very simple. Like I said earlier, I don't have to meet the press every quarter. I don't have to stand up and make excuses for good performance or bad performance. And even better, I don't have to wake up every morning. Every morning in Wipro, my scary piece was when I open up my email, there'll be 2 alerts out there. At least 2 customer escalations, 1 compliance issue, and you're like, man, it's a great day to begin the day. So that used to be my day in Wipro. All that is gone now. Now when I wake up in the morning, I read white papers, I read articles, keeps my brain alive. I think to that extent, this is much better.
Great. On that note, thank you very much, TK. Huge round of applause. And as he rightly said, he hasn't done any media appearance like this in a very long time. So thank you very much for making an exception for us.
Thanks, Chandra.
Thank you, Mr. TK Kurien, for that candid and insightful conversation. Thank you, Chandra. Ladies and gentlemen, once again, a huge round of applause for Mr. TK Kurien.